following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good Friday afternoon, folks. Tommy O'Brien coming to you live from TFNN. Thanks for tuning in, spending the final hour of the trading week right here with me, and we'll see if we get some fireworks this afternoon for the final hour. We got some fireworks today, that's for sure. Markets lower, coming into a jobs number, and that jobs number, folks, you're talking about, oh, look at that. There it is. Oh, that's not it. Forgive me. 92,000. There it is. U.S. loses 92,000 jobs. Now, the market was expecting a gain of 50,000. Unemployment rate at 4.4%. Throws a wrench in terms of whether you're talking about no cuts. Are we going to get cuts? Well, markets reacted, okay? And we've gotten quite a bounce. And look at this technical area that we were coming into. I was watching this thing at about noon Eastern time, 67.80. Came right back up to that area at 110. Eastern time, and we just touched that area again, 67, 78, 75, and we've pulled back a bit. We'll see if we get some action. I imagine we're going to get some volatility for the final hour of trading, folks. You imagine a surprise employment number like that, okay, with crude. I'm jumping around to kick off the program, folks, but you're only off 66 points in the S&Ps right now. I say that as this market's pulling back. $91.15 at crude. The employment numbers that we just got, folks, losing 92,000 jobs. The market was thinking we were going to get a gain. Now, you'll hear stories about their Kaiser Permanente. Okay, they had 31,000 workers striking in Hawaii and California, I believe. Those workers are back on the job. That number did hit that, but you're talking about a loss of 92,000. They were looking for a gain. Take healthcare out of it. You got a problem. And that was before. Now you got a problem with crude pushing $91 a barrel right now. And when we jump over the headlines, and we're going to talk about the technicals in a moment, we're going to get into the volume, okay? But it shouldn't be surprising to see that it's a problem to move crude right now. And Kuwait, this was the story this morning that really started ratcheting things up. Kuwait cuts their oil production as fallout from the Iran conflict intensifies. They don't have anywhere to put it. They would run out of room in 12 days, I think it is. I was reading in these articles earlier. 12 days, if they did not cut production, they'd just run out. They'd have to stop completely. Yeah, they got to curb their production, period. I think it was. Iraqi officials, I talked about this morning, said earlier this week that oil output at their largest oil field was cut by 700,000 barrels a day. Another field, a decline of 450,000 barrels a day. So I look at this chart of crude, and I look at this market right now, and then I look at the fact that we're losing 92,000 jobs in February. The S&Ps are back to where we were trading at in September. And this is a risk-off market right now, folks. We'll see what the final hour of trading looks like. Oh, here we go. I say that, folks. You just see that 4 or 5 S&P point bounce? Be careful out here in this final hour. I think this is going to be a fast final hour. I don't always come on the air like this, but look at this. Just since I came on the air, folks. Now, we can be fast in both directions. All right, nice 2-click market just since I came on the air. What do the S&Ps do? We're down 20 points. Oh, here we go. I appreciate you tuning in if you're out there today. Look at that move. That's a minute bar. But look at this move, okay? There are risks in this market, folks. You want to be long equities over the weekend? Look at the possibility of a risk-reward, upside, downside. We're in a war, okay? Navy ships are guarding the Strait of Hormuz. Kuwait is cutting back oil production. We're going to get some chop into the final hour of trading today, and that's, I think, the beginning of it. You're seeing it right now. You got the S&Ps off by 78 points, off 1.2%. Now, we take a look at the volume. Yeah, you're going to get some volume today, and we'll see where we finish. Right now, you're at about 1.5 million contracts. All right. Take a look at this in terms of some of... Whoops, what did I just do? We talk about the jobs. So check this thing out, man. Give me 1 second. Okay. This market's moving so fast, folks. I had a couple trades on there today, and this market is moving pretty fast right now. You just got 20 points. I imagine you're going to get a fast hour in the final 60 minutes of trading. Think about the risk getting priced into this weekend in terms of where is crude going to be by the time we open Monday? What happens if there's an escalation? Doesn't mean this is all going to materialize, okay? S&Ps could drift higher by 20, 30 points. We're already down by 80 points right now. But there's a real volatility risk. This is an hour that's going to be unlike most, folks. When you have digesting a jobs number where we're now losing 100,000 jobs a month, even if that was 30 or 40,000 jobs that were hit by the Kaiser Permanente, the healthcare deal there, it's a risky scenario. Coming into a Friday going risk on or risk off, and I imagine we're going to get some risk in this final hour of trading. And yeah, jobs report and oil. There's your risks, man. 92,000 jobs. The unemployment rate now at 4.4%. And we do have the S&Ps just chopping around right now. One more. I'm going to take a look at the weekly on the S&Ps here. Okay. And what we're doing is we're breaking below this December 15th bar. Okay, the low that day was 67.71. We're 14 points below there right now, and you did 9.6 million, and we have 8.8. It's going to be a big final hour. We jump over to gold. So quite the acceleration in gold on a volume basis, on a weekly basis, folks. You know, you trade lower, we're not quite going to engulf the prior bar. That would have been 51.28. But you finally got some volume, but you got it to the downside. Gold up $85 today, saving itself for the week, but you're doing almost 1 million contracts going into those prior weeks where you were doing 620, 466, and 656. S&P's off by 77, 45 minutes left to go to that closing bell. We're coming right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
And so what that acceleration was, folks, is that OpenAI and Oracle have ended their plans to expand their flagship data center. That was some of that volatility when we were talking at the beginning of the program. You see Oracle there spikes from 159 to 152. We bounce back to 155. You're up by 0.7%. And yeah, this news just hitting the tape. So Oracle, they're going to end. Yeah. Scrap plans to expand a flagship AI data center in Texas. Negotiations dragged over financing and OpenAI's changing needs. Maybe the OpenAI's got to deal with the government now. They don't have to worry about it, right? I half kid. Things change quick in the AI sector. The campus being developed in Abilene is part of the Stargate project. The collapse talks created an opening for Meta to step in and consider leasing the planned expansion site in Abilene, Texas. NVIDIA helped facilitate Meta's discussions with the developer. I mean, imagine this, right? Imagine if you're Oracle, and this is where the circulatory nature. You got Meta stepping in with NVIDIA to make deals with OpenAI. Oracle's on the outskirts. NVIDIA shares are down by 2.3%. Okay. Well, the market does not like that. And that's not what you want to see, man. Okay? Not who cares what Oracle does, but Oracle's not going to tank this market. But if there starts to be some cracks in the NVIDIA on top of everything else, you want to throw that on today? There's a lot of volatility today, folks. I don't want to throw that on top of today, as in, wait a second, NVIDIA's got bearish news. They have OpenAI canceling deals with Oracle. That's a worry. So the last thing you want to hear is some of these deals that have propelled this market dramatically higher unwinding. Oracle and OpenAI used NVIDIA's semiconductors at the Stargate site. NVIDIA became involved to ensure its products would still fill the expanded data center rather than AMD. Imagine that, right? So they have to step in to make sure that that deal's not going to get done with a competitor. Sure sounds like they're backlogging their own product. Not, it's a complex financial arrangement, but you read that one, all right? This is part of the article I was just talking about. Check this one. This might be the best line of the whole program, folks. Okay? NVIDIA became involved to ensure its products would still fill the expected data center rather than that rival AMD. That's not the market making free market choices, right? That's NVIDIA using their purchasing power for anti-competitive reasons. Imagine that, right? You jump over to AMD shares. They're tanking as well, down by 3%. Look at this. Micron's down by 5.7. Broadcom down by 0.7%, but accelerating a bit. Whoops. Boy, look at this S&Ps, folks. Okay, you got lows out there of Tuesday of 67.18. The low today, 67.15. You're not going to do it on daily volume. But when I look at this thing, we're trying to break the February 2nd lows, and the low there, 67.51. We're at 67.52. Let's go. We're 1 point away. And you break that, 6,500. Not the end of the world, okay? We're at 67.52 right now. But you're going to have volume too. All right, we're going to get a lot of volume in the final 32 minutes of trading with volume at the close. Crude exacerbating things dramatically. Look at this. Folks, you don't even have this much volume on a weekly basis on crude. Going back to when this thing accelerated to 130, you didn't have this type of volume. This is an event. Okay, the Grand Ayatollah for 35 years. We don't know what's going to happen. There is real risk in this market. I'm not screaming to the, high water, but you better believe it when you look at stuff like that. And then you go back to those S&Ps, and yeah, we're at 9. So let's take a look at the SPY as well. Yeah, see, we're already below that week, February 2nd on the SPY. The S&P futures had a lower low. We now just breached 67.50. We're off 85 points. NASDAQ 100 off 344. Dow's off 474. Let's take a look at metals. Yeah, I mean, not what you want to see for you bulls out there. Okay, quite a pullback. You got some dollar strength this week. Yields are a real problem in this market right now, with the 10-year approaching 4.15%. And if anything, folks, this is the move. Look at this 10-year. You take out the prior week, and you're going to do it with volume. We're at 15.1 already. You got the final hour to come in. I mean, what if I told you last week that we're going to engulf the prior 2 weeks, and we're going to do it on greater volume than the 16 million contracts you did in the 10-year? You go, whoa, well, that was a huge week. We got strength to the upside, right? Well, we did until this week. And follow the charts, folks, okay? This chart's saying, man, lower price, higher yield right now. The dollar catches a meaningful bounce to 99 right now, and metals have reacted accordingly. And this might be the trend, even if you're just talking about for a period of a few weeks or a few months. Okay, we could easily see a trend here that you get higher yield. We have higher crude prices. We're worried about inflation. And that is pushing the dollar higher, which is weighing on the gold contracts. And maybe that's the perfect setup. When I look at this, right, I say, okay, maybe that's actually the setup for when we get a new Fed chair in and we start getting some cuts. And then the market starts priced in lower yield. And maybe we're going to get a rise before then. It sure looks like it when I look at that 10-year, folks. Okay? Look at that volume, man. Right? Higher price, lower yield, and then boom, we reject it all with an engulfing on a weekly basis. That's the 10-year. We take a look at the 2-year. Okay, not quite the same volume. We might get there, but you take it apart on the 2-year, the Fed getting heavily influenced, and not influenced, but the market repricing the odds of what the Fed's going to do, and the 30-year, same deal. This market's been drifting lower since I came on the air. Look at this. Yeah, we just lost 35 points in the S&Ps, and we still got 35 minutes left to go in trading, folks. And there is no reprieve in crude right now at $91. All right, let's take a look at the heat map. Let's kick it off with the S&P 500 right now. So some of the software companies, we were talking about this earlier. Intuit, let's check out Intuit. I'm talking about these software companies, right? Look at this. Look at this, man. That's some strength, folks. Okay, unfortunate you're not going to do it on greater volume than the lows, but that is some strength. We're talking about this one and Salesforce a lot this week. Salesforce, not quite the same volume this week as Intuit. You're flat today for Salesforce, but these stocks overperforming the market, potentially reassessing that they got it wrong on the dramatic pullback that they had. Oh boy, folks. All right. I mean, this was an early start to lower prices. This is a critical area where we are right now. Okay, 67.40. You break this, we're going for the lows. This is where we found a bid, where you got a volume acceleration at about 1 p.m. Eastern time. We're trading right now 67.40. S&P's off 1.4%. You don't get many Fridays like this, folks, in terms of digesting a crude price that's spiraling higher. And then we got the jobs front, right? Crude alone would provide volatility right now. And then you put in the jobs number, losing 92,000 in February. Fast fingers for the final hour of trading. We got 33 minutes left. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps challenging the lows that we made at about 1245. We just accelerated, as I mentioned. This is your trading range. And hey, as traders, folks, how about a 40-point range from where we were at 10 a.m. this morning, right? Look how many times we've bounced. Once you hit the upside, down to the lows, upside, You chop around, upside, downside, upside, double top. We're back at the downside. Sometimes it's not as difficult as you think, folks. Find technical areas. Keep your stops tight, okay? And, yeah, it sounds easier than it is sometimes, sticking with that plan. But right now, this thing's trying to break through, okay? You got lows out here of 67.39. We're literally right to the tick. 67.38.50 on the S&Ps, down by 96 points. NASDAQ 100 off by 401. We check in on NVIDIA. Yeah, that's not helping. NVIDIA and Oracle Oracle and OpenAI canceling their deal. NVIDIA stepping in to facilitate a deal with Meta to make sure that that facility is still going to be purchasing NVIDIA chips. Now, if NVIDIA chips were the deal, they wouldn't have to be stepping in and being part of these deals, and it's not bad business. Of course they want to, but it's surely anti-competitive when that's literally the point they're stepping in. And the only reason that they're getting the deals is because they're helping with some of the financing going on. Jump over to Microsoft shares, down by 0.3%. You jump over to Apple. A little bit of a pullback in this pullback we got going on the last half hour. Apple off 1.4%. Amazon shares down by 2.6%. And yeah, in terms of escalation, there's no deal unless an unconditional surrender. And what exactly that means, who the leader is next, right? Where you go from there, obviously. The details matter, and the market's struggling with them right now, as you got crude pushing $91 right now. Let's check out the banks. So, boy, these banks, I was talking about this morning. You better have those spikes up, and look at the banks. They were getting really slammed this morning, saving themselves a bit. Goldman Sachs off by more than 2%. And these things have been getting hammered. These bad ticks ruin everything. But Goldman Sachs, is that Wednesday? Yeah, Wednesday. My goodness, right? Was trading at 876. Protect yourself in this market, folks. We got moves that we haven't seen in a long time, especially in just mammoth, behemoth companies. Morgan Stanley, down another 1.9% right now. JP Morgan shares down 1.6%. Bank of America. Look how many times the banks have bad ticks. Why do the banks have all the bad ticks? Bank of America off by 2.1%. I'm not sure, but they do. Their chart's riddled with bad ticks. All right, look at this volume we got coming in. That's a 5-minute. Let's put this thing on a 10-minute. Take a look. I mean, when you get big moves like this, it's usually correlated with volume. And you just missed it on that last 10-minute bar that ended at 5:30. And you're just under that level, 67.39. We'll call it 67.40 in the S&Ps right now. NASDAQ 100, you're almost right back at the lows. NVIDIA not helping that. And the Dow, let's check out Caterpillar, another high-priced equity influencing the Dow. Yeah, look, Caterpillar's down $24 and Goldman Sachs is down $16. But between the two of them, they're down $40. And meanwhile, you have an equity like Verizon with a $215 billion market cap that trades at $51, the entire equity. Well, look at this Dow. But it's not the market cap in the Dow. Remember, it's the high-priced equities. Goldman, $818 equity, down 2%. As I mentioned, Caterpillar off 3.5%. Yeah, American Express, another $300 equity, down 2.2%. Let's check out Cisco off 1.7%. Yeah, Cisco's got all this volume on that pullback on their earnings. Not what you want to see, right? Light volume last couple weeks. Not much volume this week as well. Let's check out the SMHs for our tiger in the den. Yeah, you better be paying attention to this one too. This market's been bringing this whole equity market higher. The SMHs go from 170 to 427. and we'll see if we break this with volume, because look at this. This is the same thing I've been talking about for the market. These are big points we're at right now. The last 24 minutes of trading today, it's going to be an important one. Right as the S&Ps, oh boy, right as they jump a little lower, because there's a lot of different price points here. Do you see how you're talking about the SMHs? You got a low of 374. We're at 378. This thing's down $16. You go $4 more, and you take out these lows, 60.5 million. I don't know if we'll do 6 million. Yeah, we're not going to do 6 million shares on the close, but we are right back down to this level. You're not going to break it on volume on the daily as well. Look at this. You did almost 17 million at the lows there. So there's an area. If you're looking for a bounce, it's right here, folks, in the SMHs. Okay, you got volume there on a weekly. You got it on a daily. And yeah, let's check out Boeing. So how about a 500 aircraft deal? How's that sound for you? Yeah. Nearing a 500 aircraft deal with China ahead of Trump visit. Now, here's what cracks me up on all this, folks. Boeing, I keep looking at Boeing, okay? Boeing's not going anywhere. There's only 2 airplane companies in the world. Remember this, Boeing and Airbus, okay? It's in our defense interest to always have a company that makes airplanes, period. It's just that simple. And so when you look at it like that, they have a nice backstop. But when you look at these orders they get, remember that they have a backlog that is going to take them years, if not decades, to clear through, okay? It's going to involve 100 Boeing 787s and 777s. They're going to play a role in the trade agreement, but this just gets put at the back of the line. As of February 27th, Boeing had 134 unfulfilled aircraft orders from China. China's already got 134 planes they're waiting for. The company has 875 orders from other customers, right? So it's amazing that in the context of these negotiations, China should say, I'm going to buy 1,000 planes. They're not going to have to pay for those for like 5 or 10 years until they come due. They got 134 planes ahead of that. So, Boeing reacting today, but remember that when you hear these types of backlogs. They got a big deal. China, of course they want to do that. But Boeing up by 3.5%. S&Ps, we're making a run for the lows, folks. 67.31, down by 104 points. We're coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks, and we got a bounce right at that area. You make a dip low at 67.30 and you charge back, and we got some volume. Okay, you got some volume, you got some dip buying, market saving itself a bit. Things were looking a little dire with almost 25 minutes left to go. That escalation to lower prices, now we'll see if we can make a run to the highs. Because that's what this market's been doing, folks. It really has, especially today. You know, find a trading pattern, find a range, right? Find technical areas. The top end, 67.80 right now. The bottom end is 67.40. It doesn't get much prettier than that. All right, if you were short in this market and you're hitting this level, okay, you want to be quick at these levels. Now, maybe you take half the position off here. Okay, I'm just giving you ideas of how to manage trades. When you hit certain technical areas like this, it doesn't look like a lot. This is 40 S&P points, folks. You just got 40 S&P points in 35 minutes. Okay? And yeah, that's right where we're bouncing at. It's where you were at 9 in the morning. It's where you were at 12:40. And the market's found a bid, and it's found a bid with volume. That's the important part here. That's why I say we can make a run. It's got 16 minutes left to go, and in the final minutes of the trading day, yeah, just like that. I think it's a risk-on day, but guess what? That's your volume, folks. They're buying it at 67.40, just like they did at about 1 p.m. Eastern time as well. Okay. That was Boeing. We're going to talk a little bit of here we go. In terms of the Fed, pretty sure this is refreshed. I was looking at it, but let's just make sure. So the odds that we get a cut, folks, no, not happening. 95.5% chance the meeting in less than 2 weeks, March 18th, no cut. Okay, that we stay at 3.5 to 3.75, even with the market losing, the job market that is, 92,000 jobs in February. You jump over to April 29th. This is Powell's last meeting. About an 80-20 probability right now that the market sees no cut. Okay, about an 18% chance that maybe Powell sneaks in a cut, but not likely. You go out to the first meeting for the new Fed chair, Mr. Warsh, if he gets confirmed. No, the market still sees no cut. Okay, we got a problem with inflation. You go out to July 29th, and finally the market's pricing in just over a 50% probability that we get a cut. Really, it's about 50-50 chance of whether we get one cut or none, with a 15% outlier that you get two cuts by July 29th. Okay, you go to the end of the year, December 9th. Now, here's what's wild. This market is pricing in, if you add up the 13% chance that we're right where we are right now and the 32% chance here that we go down by 25, a 45% probability that we're either at no cut or one cut by the end of the year. No cut or one cut. 45% when you're looking at the CME Fed Futures Watch, which is using swaps on the S&P. Excuse me, swaps on the yields. Pretty remarkable. So yeah, the market is very worried about crude prices right now, folks, as it should be. $90.67, and as I talked about as well, you're talking about volume, man. Boy, are you talking about volume. All right, let's take a look at some other equities for our Tigers and Tigresses in the Tigers Den. FedEx down by 4% right now. This is a daily. Let's take a look at the weekly. All right, we're breaking this low the week of February 9th, and you don't have really that much volume. You don't. You're going to be close. 10.3 million the week of February 9th. You're coming into it with 8.7. You get this big week from February 2nd. All right, let's check out this one. The commodity. Yeah, this is the commodity ETF. And look at this thing, man. Up another 5% today. How's that for a weekly? And this is the iShares GSCI Commodity Index Trust Indexed Trust ETF. So this ETF, folks, okay, it retracts the results of a fully collateralized investment in futures contracts on an index composed of a diversified group of commodity futures. Let's see if it tells us what the holdings are. Yeah, I did this before. However they're doing this, they have it all in the GSCI commodity index with some treasuries. Let's see if we can pull that up, GSCI. Yeah, it's just going to be all of them rolled in. But check out this, okay? This year, look at this. Okay, Tim Wood was talking about this, and he was talking about it when it was down here. And we just broke past 26.49, man. Now, we don't have the same type of volume in this thing that we had during 2022. But yeah, you better put that one on your radar, man. Because something's going on in a big way. I mean, this is commodities, folks, and you're from 23 to 30. All right, dollar looking to end the week right near 99. Check back in on yields. So 4.14 right now. We'll see what kind of volume we get on the close. Because you're coming into 16 million shares and we're at 15.2 right now. You got a shot to do it. You take a look at the daily. No, excuse me, that's the monthly. It's only March 6th. Yeah, a lot of volume today. Quite a shooting star. Check back in on NVIDIA. All right, NVIDIA saving this market a bit as well as some of their deals that could impact them. I mean, imagine this, right? These are the deals, okay? That is a risk that we all better be aware of, folks, okay? Oracle and OpenAI got a deal going on. All of a sudden that falls through. All of a sudden NVIDIA is scrambling because guess what? Maybe they're going to use AMD chips instead. NVIDIA steps in to facilitate that deal with Meta. They're all in the red today by dramatic numbers. Meta off by 2.6% right now. You get those S&Ps right back. Oh, you just gave up that pop. Now, we had some volume on that pop, but you gave it up as well. We're back under 67.40, folks. All right, we got 10 minutes left to go in trading, and you got the markets testing this area. The lows at 1230. 67.37. NASDAQ 100 off by 1.5%. Dow off by 1.1%. And the Russell leading the way off 2.4%. We're coming back, folks. One more segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Sorry for that. Jumping back in. And we at the S&Ps right now, down by 93 points. As I mentioned, market saving itself a bit right in this technical area. And don't tell me there's no things as technicals, folks. Okay? You know, we all are the same. The markets are a great representation of our fear, our greed. And those are just human emotions. I don't say that with a bad, fear, greed, all that stuff, right? So sometimes it's not as difficult as you make it out to be. You look at today, for instance, boy, you pick out a top and a bottom of the range today. Oh man, you're having a good day, right? If you're looking for maybe 67, 80, you start buying into that area. And listen, this is hypothetical. It's not this easy. But keep these days in mind when we're coming up, because we got a volatile market right now. You got a VIX. Yeah, how's this? Okay, even as the market's saving itself a bit, look at this VIX. The VIX is not. People are buying insurance going into a weekend like this weekend. This is what I'm talking about. Okay, this is a Friday like none other. Look at this VIX over the last hour. People are paying up for insurance, folks, and the market is, they're reacting. Yeah, 67.40 right now. Check back in on Boeing, up by about 3.8% for Boeing shares. The bank's getting hammered today. We'll keep our eye on those. Because not good when you got the banks getting hammered, man. Goldman off by 1.8% right now. And yeah, we'll start to see if some of these deals get canceled. Not what you want to see. NVIDIA down by 3%. NVIDIA. What's that, about $160 billion in market cap wiped off? So much for $5 trillion. We're at $4.3 trillion. All right, folks, thanks for spending the final 60 minutes of the trading day here with me. And we got the S&Ps on a weekly basis, folks. Okay, we're breaking below the week of February 2nd. You're doing it with volume in the S&Ps. The next stop could be 6,500. That's what it looks like right now. Market's under pressure. We'll see how crude does. Crude's going to be a big one. Folks, have a great weekend, a safe weekend. Enjoy it with your friends, your family. Enjoy it, folks. Have a great time. We'll see you Monday. Thanks.